Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Hello friends, this is Vijay Bambwani. I hope the market's treating you well and you're able to navigate through the intricacies of the market a whole lot better after watching my videos. This is the purpose of my videos, to basically use a 360-degree worldview based on behavioral finance to break down the intricacies of the market into very simple, easy to understand concepts. I'm sure you've watched my recent videos, one of which was bear market investing. It was about how the Church of England conquered the cyclicality of the market and used timing based on human behavior to come up trumps. This video is also about a behavioral nuance, and I've always told you since many quarters that you've been watching my videos that the market talks to the investor or trader. It is up to us to listen to the message of the markets. Now, markets are a sum total of all the behavior, buy and sell, of all the participants put together. And we as human beings are prisoners of habits. And habits tend to be repetitive in nature. Therefore, market also witnesses price cycles. Now, price cycles can occur at price points or they can occur at time intervals. So we can break down the price into supports and resistances or cycles, time cycles. Now, the one that I am talking about right now is a time cycle. To be more specific, the March year-ending cycle. You see, if you were to break down the market, it is possible for a discerning trader to break down time cycles into year of the decade, quarter of the year, month of the quarter, week of the month, day of the week, and hour of the day. This video is about the month of the quarter. March, for us Indians and my viewers who are watching this video from abroad, is a special month for the simple reason that our financial year is drawing to an end. Not only is this the first calendar quarter ending, but it is also the financial year ending. Now, this has implications for financial markets. The big boys of the stock markets, or financial markets rather, are the mutual funds, because they collectively hold the largest sum of investable pools of money that is floating around in the market. And as per securities law in India, it is mandatory for all mutual funds to disclose their net asset value, or NAV, in one regional and one national newspaper at the end of the year. Obviously, this performance is very keenly watched by investors, and the fund house that discloses the highest appreciation in the NAV year on year and quarter on quarter basis gets the maximum inflows in the coming few months. And assets under management, or inflows into the mutual fund, is what the game is all about. So, in the month of March, there is a concerted buying activity happening in the market, and which is why you should not be aggressive on the short selling side towards March end. For that matter, every quarter end, the mutual fund industry tries to ramp up its NAV, but March ending is very special. Like I said, it's the financial year end. Plus, this time around, there is one additional behavioral aspect that you need to keep in mind. The LIC's IPO. Quite simply, the largest IPO in India in the history of our financial markets. Now, if this IPO is to go through successfully, which it must, and I think it will, the markets need to be kept optimistic and buoyant. They should be kept cheerful, which is why Big Brother is likely to step forward and keep the market stable. Now, some of you might have a doubt as to what will happen if the Ukraine crisis escalates. Now, there is a reason why I mentioned Edwin Coppock's theory about how the Church of England overcame a bear market to invest and make superlative returns. In that video, I would request you to watch that video if you haven't already done so. I have told you how the human mind overcomes grief, and a bear market is nothing but grief in a certain time frame. So if it is a short-term cycle, it's 10 to 14 days. If it's an intermediate cycle, it's 10 to 14 weeks. And if it is a long-term bear market cycle, it's 10 to 14 months. So you would have seen how the markets has basically shrugged off all the worries about the Ukrainian issue in a matter of 10 to 14 trading sessions. And there is a video that I had recorded prior to the Church of England bear market investing strategy video. It was about how Ukraine is nothing but a blip on the long-term radar for a discerning investor trader. Do watch these two videos. So if you have doubts that Ukraine might act as a drag on the market, I think Ukraine as an issue is not something that should bother the market too much. Yes, if there is another news flow which is not yet discounted in the market or not yet known to the market, then I'm willing to admit that the March magic, as it is known amongst the old-time traders, March magic, because magic happens to prices. I'm willing to admit that the March magic may not work then. But as things stand, as the news flow that is available to us is concerned, I feel the month ending of March should be witnessing the markets ending at a relatively cheerful note. And on this cheerful note itself, I bid goodbye to you, not before reminding you to click like on this video if you liked what you saw. Subscribe to my YouTube channel if you haven't already done so. Click on the bell icon to receive instant alerts about fresh videos being put about here. In the comment section, good, bad or ugly, I'd love to have your feedback. And help me reach out to fellow like-minded investors and traders by referring my video to your family and friends. I thank you for your patience in watching my video. Till we meet again in my next. This is Vijay Bambwani signing off for now. Take care. Bye-bye.